Alrighty. So I hope everyone's having a good Sunday. Um, Pretty much just going over everything that had happened with price this week. So before I get into that, I always do a recap of my statistics and things of that sort at the end of the week, just so people and I can get a good idea of any mistakes that I've made. Uh, I do like coming here and just looking at this and just getting a feel of you know how long I'm typically in the trade, my best trade, worst trade, things of that sort. I usually do try to keep a positive equity curve, breaking even on majority of my trades, putting in profit. Because usually where I get in at, if it's gonna take off, it's gonna take off. If I get stopped out, then I possibly was in the trade too early. Um, so this is what we close out with the 150k accounts. Because now I am working on 750k in funding after rinsing out my 50k accounts. So before I had 250k in funding, ended up losing one of those high risk accounts, and then I kept four copy traded together that I was just passively just compounding. Uh, Eventually grew all of those accounts to about $15,000 in profit, and then I pretty much paid myself out. Majority of what I was eligible to take out of those accounts was about $1,700 to $1,800 a piece, pretty much averaging out to like a $7,300 payout. So now we're upscaling. So let those accounts go. Now I have way bigger ones. Uh, you know, it could take a little minute to pass because they are 150Ks. The bigger you go, the longer they try to stretch it. But taking it 1 week at a time. Eventually, this will be a lot progressively, higher. But we're at 1.169.60 times 5. So we have a total profit of $5,848 going across these evals. So more of the story, 1% locked in, 8 more percent to go because I have to make $9,000, 9% of the account pretty much in order to pass the evals for all five of these. So definitely want to get these done all in one go, but of course, take my time, stay patient, wait for setups, and just keep upscaling and bringing the account balances up because the worst thing you want to do is give all your profits back. Um, with that being said, I'll go ahead and now just do a little bit of touching up of things that I had marked up and identified throughout the week. So I do record literally, or if not, if majority of all of my trading sessions, and I post them all through like my Instagram reels and TikTok. I do have a TikTok. So when it comes to just recapping on the week and just seeing things as they are, especially at the times that I trade, say recording your videos and just being able to rewatch price and see it gyrate, uh, you'd be able to get a better understanding of why you see price do certain things and trade in certain levels and get a feeling of like what happens when price reacts out of those levels. So here we are with Monday's price action. So you see we opened here in Asia, midnight opening, IPDA for my ICT enthusiasts. You know exactly why we delineate that midnight opening price because it gives us where our high and our low of the day is in the current trading range. And from there, we always see the market bottom out, grab something, trade into some old low, some sell side, maybe a 15-minute order block, FEG, and we get reactions out of those levels. So and that's just to sum up pretty much what it is that I'm doing. I'm just identifying order flow, and from there we use that basis to pretty much get an understanding of why you look for certain things. So Monday had a very great long opportunity. Keep in mind, really all you need to make profit is trade market ranges. Asia session low to London session high. In this sense, this will be London session low back here. Oh, my bad. I meant to say Asia session low. So Asia session low was right here. You tie that in confluence with the Fibonacci, the golden zone within the Fib, the 70.5 to 79% retracement level in confluence with the 15-minute order block. We bottom out here, creating a low of the day, which eventually became our target for the draw on liquidity on Tuesday. For those of you that were able to participate in that short was really, really nice. So that's pretty much what I was seeing with the ranges here. You got Friday making that low here at 12:30 p.m. to London session high. Also had some confluence with the 62%, almost identical to the market range that we identified with Asia to London session high. So though you can use the Fibonacci to use from focal points, lows and highs, pretty much protraction swings that generated the price swing. I like to drag them from lows. So if it wasn't this PM session low right here, then of course it could be the Asia session low into the London session high. So if you have like a good idea of how protraction swings are within the range, once you have a trained eye, you will know exactly how to use the Fibonacci and what it is that you're targeting with the Fib. Of course, it'd be the old highs and things of that sort. And it pretty much rallied at 9:30. So cool little buy there. Then after that, we had the market top out at about 10:30. Scale in and see exactly what was happening here, because I know that this was a rejection block here. From this protective high. Well, it became a protective high, but there we go. So on the 15-minute chart, you can see how price pretty much formed a rejection block here, traded off, re-rallied down in the lunch hours, and then the market ends up closing here in this area, and we end up making the high of the day pretty much in Asia, true day. So we make the high of the day right here at 21.45, trading into this 5-minute FVG. And this is literally like how you would get like your top ticking entries. So confluence here would be that 5-minute FVG working as our market resistance in a sense. Price comes up here, trade above the old high. Then we also have our very old favorite order block. So trades into the order block. We have it respecting a little bit that FVG. Probably wouldn't count this as a respectable FVG since it rated through it, but the body closures are there. And then we turtle soup as well. So great confluences to pretty much be able to participate in the short and taking this down to this low here. So I just want to draw the fib just to see if there's any confluences with this protraction swing. And yes, we have a 70.5 to 79% retracement level with the order block, the turtle soup, multiple confluences to continue that bias of being a seller and targeting the draw liquidity, which would be right here at this low. So for my Asian session slash London session traders, you would have possibly been able to capitalize off of some type of move like this and been in and out. So I usually try to risk no more than about 15 to 20 points on my trades. I use one contract trading in Q, so I try to risk anywhere between about $300 to $400 per trade and aim for like 1 to 6 RRs and more. Usually where you get in at using these concepts, just top ticking candles and bottom ticking them, your risk to reward is pretty fucking crazy, especially when you're on the right side of the market. So pretty much seeing that, but of course I trade New York session. So this was the trade that I had participated in on Tuesday. Tuesday was pretty much my best trading day. Beautiful setup, just failure to hold. Personal reasons, I panicked. I'll say I definitely dropped the bag here because I did not expect for this to drop for over 200 points. I was really just looking for the low of that current day to be targeted, and it went for way more. It really gave up the goose. Uh, Targeted Monday's low of the day. That was the draw liquidity, running out Asia session low, taking out some old price action from back here as well, and pretty much created a bottom. So that was pretty good trade. I'll go over the confirmation real quick for what caused me to, I guess, get in for the sells. So if we have a continuation of Asia here to the low here, this was London's low, but we end up making the low of the day in pre-market New York. And from there, we rallied 7, 8 o'clock, all the way up until 9 o'clock in the morning. And then what do? We come up here into Asia sessions high, and it gives us a turtle soup scenario while still respecting the price swing. So if we were to take the protraction swing from Asia session high up here and drag it all the way to that pre-market low in New York, you will see that we have a confluence with a 79% retracement level in between that 70.5 area. For me, I'll always highlight this as a golden zone or a optimal area of where I would want to see price respect the trading range, because that's pretty much what you're using the Fibonacci for. You're using it to get an idea of where the market can possibly retrace within the range and respect that range into heading down into lower prices. Um, just a very quick and simple breakdown of pretty much what the Fibonacci is used for. Just using it to pretty much predict where the market can retrace to, and you use that in confluence with other things such as the sweeps on liquidity. And of course, once that manipulation is done at 9:30, we just see price completely dump. So it only traded into this high for about 3 points. So it rated this high for about 3 points on open and just completely just shit it. So this was pretty much my trade idea of seeing the market come up here, liquidity sweep this old high here, using the Fibonacci from the Asia session to the pre-market New York low, 15-point stop, targeting what the draws on liquidity, which would be the low of the day. At one point in time, that was a low of the day, but we end up rating that and creating lower price action. Then we have Monday's range being targeted, so it turns into 1 to 8, 124 points. And then we have Asia session low being ran through from Sunday, beginning the range. And then after the 144 point target, there's pretty much nothing else here besides it just running for more before bottoming out. So after it got all the way down here for about 239 points, if you just do the math to that, using one contract, 239 points, 0.50 times $20 per point because you're using one contract. So this trade pretty much panned out for about $4,790. So I could have literally made 4.5% of my account on this trade if I would have had conviction to hold. So that was my fault. I should have believed in myself and held my trade. So enough of that. Can't dwell on the past and just keep moving forward. So after Tuesday, pretty much giving up the goose for about 240 points, we had a similar trade idea to the upside, going for this about the same about point range, 200 plus points, pretty much. So what pretty much signaled off the confirmation for Wednesday. After we dumped completely hard, the market left nothing but imbalances, and with the market maker concepts, we don't want price to pretty much not fairly trade through these levels for fair valuation. So the market left a liquidity void. So I was just looking at that liquidity void to end up eventually getting filled on the upside, which it did here, and forced to possibly take out Asia session high back here. And of course, these internal range draws on liquidity, which would represent the high of the day in New York if you're factoring in midnight opening price using the IPDA confluence. That's why this high ends up becoming of importance later. So you see at opening at 9:30, we trade lower, coming into a macro low back here. I believe this was also like a 4-hour support. I could be wrong. No, it was a support on the hour. Yeah. So we come down here, rating stops here, pretty much triggering sell stops and limit orders back here, and the market completely flips over and we go bullish. So looking at that again off of the 5-minute chart, and this was Wednesday. Go to. So we end up bottoming out right here, trading into that liquidity pool. After the market bottoms out, we get a low, higher low here. So again, pretty much just getting a read on what's going on with price. We get a low here and then a higher low. And then we get the complete shift in market structure here. Breaks that high, respects the lower high, and pretty much from here you just look for a continuation of price. So if you was just scaling like on the 3-minute chart, something that just makes that price look a lot clearer, go to. You could get a clean idea into the PA. Maybe this would have possibly helped you been able to confirm the buy. So I like using these as well. This very last up close candle here, it breaks structure right here, and then the market trades up, down, creates the low, and then we have this swing high being broken. Once you see that there, that's where you could pretty much draw the fib from this low to this high, and then you get an idea of what the market is trying to respect in this range once it shifts market structure. So you would be expecting for this range to pretty much hold up. Comes at about 50% of it rejects strongly off that 50% level. That alone should give you a great confluence that the market is pretty much respecting it going higher. And it rallies up into the projection levels. You can enter in off of the 50%. The market doesn't have to do a full, optimal trade entry lower into 70% of the range in order for it to be respectable. You could definitely trade price off of the 50% level. That is definitely a strong confluence as well. So about a 15-point stop, same type of trade model. The risks never change. And then the draw is of course higher. We rally into these highs back here, which was pretty much the high in London. So London session high gets manipulated. 9:30 opening, we traded lower, coming into the support, trade into that liquidity pool, shifting market structure, and we rally higher. And it goes all the way up. Go to a higher time frame just so you can see everything a lot clearer. We go all the way up. We fill in that liquidity void. So that target was about 136 points. Then we come up into the high of the day in New York, 466 points. Then you have Asia session high back here, though I do not have it marked up. That's about 883 points. And then the last and final target would have been the PD array on Monday's high, which also happened to be the high of the week at this price level here of 2343.75. So it did not fully draw up there, but it got close enough to it, and sometimes that's all you need. So this trade pretty much panned out for about 227 points. That was really, really clean. So I can also turn my chart executions and things of that sort on, but I'll do that at the end of the video. Just want you guys to get an understanding of how to be able to identify price, I guess, the way that I do. And, maybe you might be able to add some of this stuff to your game and pretty much capitalize on being able to identify things after, what I show you. So who knows? Maybe this helps someone. So, oh my God. Thursday was like a very, I don't know. I really just wouldn't consider these to be conditions of like high probability trading, but again, the market is going to go wherever it's going to go. regardless if it looks clean enough to you or not. I mean, I would honestly say like the best of days to pretty much trade was Monday. Tuesday was amazing, and then Wednesday was awesome. Thursday was cool. There definitely was opportunity in Thursday. As you see here, we traded into that 15-minute FEG plus that 30-minute order block, and we just seen price rally off of that confluence after bottoming out. Um, but then again, like there's setups. It's just look at the ranges. It speaks for itself. Not every day is like a optimal day to be trading, but you can definitely find opportunities. Disgusting market. So looking at Thursday, we had price trade above midnight opening. We get a turtle soup scenario sweeping liquidity, and then the market does this, creating a high, lower high scenario, and then we turtle soup one more time after the 9:30 manipulation. So we opened at 9:30. Price came up fairly higher. I did get into this trade at on the 30-second chart. So though it does look disgusting, the 1 minute and 30-second chart made this PA look pretty much clean, which is sad enough. Now you have to drop down that low just to get a clear read on the price action. So now it looks a little bit better on the 1 minute, but the 30-second is really what this idea was called from. So you do understand that price is fractal. With that being said, it doesn't matter what time frame that you drop down to, it's the same shit. So this was pretty much what I was seeing on the 30-second chart. We had 9:30 open, manipulate the high, create that high lower high scenario with the turtle soup, and then we see the market rally out of this area with rejection at 9:48, and that's pretty much what would give you the confirmation to sell short here with 15-point stop, and you target the lows. All internal range draws to the downside. You pretty much target looking for those to get filled and priced to create levels, giving you more confirmations to take it down lower into that drop liquidity. Then we have this final level back here. So this was like a very, very clean trade on the 30-second chart, targeting all the way down into these lows, 1 to 13, because of course your stop would be adjusted and be put into profit. So the risk to reward would change. And then after it did that, we had it bottom out here on the 30-second chart, right in that 15-minute order block. Same thing again. We have price trade into the 30-minute order block, which was also in confluence with a 15-minute fair value gap. After I finish marking this up and things of that sort, I go in or zoom out to the 30-minute and the 15-minute just so you can see the confluence with the order block and the fair value gap. So it comes here, it bottoms out, creates that low, we create that high, and then that higher low. That indicates a shift in market structure damn near. We just need to see this high be broken and manipulated, which it does here, it trades here. So now we indicate that as a shift in market structure. It's no longer giving us lows and lower lows. It's now creating a bottom, a higher low, and then breaking that swing. And we see price should trade off of that. So that's pretty much the idea that you want to have when you're expecting price to pretty much go long. When is it time? This is literally one of the bread and butter setups that you would pretty much use to predict when it's time to get in for buys such as this. So we see the market trade into this 30-second FEG, respecting the market structure shift here. This isn't a breaker because we didn't break below this low. So it's just a simple market structure shift, and you would look to be going long in the break with your stop pretty much under this low here for about 21 points, but me 15 to 20 points, anything between there is good. So that would have been where I would be setting my stop, and then you would be looking to target the highs up here in London, New York, whatever it is that you're pretty much eyeing on the draw side. You would be looking to target those areas wherever your draw liquidity is. So that was a pretty good trade. Um, and it went all the way and targeted the previous day high on Wednesday. So this was about a 99.5 trade, almost 100 points. So it's pretty cool. And then it also ended up creating the high of the week after breaking past this level in Asia. Pretty much Friday created the high of the week because we opened in Asia. So trade pretty much panned out for about 118 points if you factor that in after it traded into the new day. Now, the very last and final thing that we'll be going over is this Friday. Friday was a very cool day. I didn't participate in the market on Friday, to be honest. Once I was able to break even, when I was thinking that shorts were gonna hold and maybe we would have seen lower price levels at least, uh, I just let this trade pan out. I let it do its thing. But I definitely was watching this from beginning to end. So you pretty much go down to what time frame looks the cleanest to you. It doesn't have to be on the 1 minute. If you don't find that to be a very good entry time frame from you, that's cool. I just keep dropping time frames until the price action gets cleaner and cleaner and cleaner. And then from there, I use several other charts from the higher time frame to just get an idea of how the candles are closing. In this sense, we had the market trade through some macro levels, trade through the low of the day here, poking it, rating stops. This was pretty much Friday's low plus a macro level. I believe, if I'm wrong, this wasn't Friday's low. My bad. This is Friday's low, 23,330.75 when it made that bottom. But this was that intraday low at one point in time. The market didn't make the low of the day in London, and that low ended up being rated, and we made the new low of the day here. At opening, we seen the market trade higher, trade lower, manipulate the low of the day, create the new low of the day here at 23,330.75, and then taking out some macro level uh, sell side here on Thursday. That's what I meant to say. So we see how in the 30 minute, that's still some major swing here. The hour, um, and then it also did it have confluence with the 4 hour? No. So yeah, it was just a confluence with the hour and lower time frames. That was a low of some significant levels that the market came and traded down into, and just did a run on stops, pretty much. So again, like you could do things like taking the previous price range. That pretty much starts the protraction for the swing up the Asia session high, right up here that we made on Friday. So just using that Thursday bottom to that Friday's high, you can have a confluence of the market range. Pretty much get an idea of what is it trying to do, where is it retracing down into. So at 9:30, now you get an understanding that we opened here, traded down into this macro level here, grabbing some sell stops, rating liquidity, and trading into that golden zone that I like to see within the 70.5 and 79% retracement level. So it comes down into there. We see the market create a bottom, and after stops have been ran, keep in mind we are, in all-time highs. Uh, Really, any idea of shorts are not really, for the idea of being long-lived. It's just being able to trade within my model of like a 9:30 to 11 o'clock. So if I can't find my setup between that window, I'm pretty much closed up shop. So this was one of those trades where I could have just waited for all of the manipulation to be set in stone and just got in, but it was way too much uncertainty for me with all of the whipsaw. I didn't know if it was really gonna buy, and I damn sure didn't know if it was really gonna sell. So I just avoided it all in all. I do not like trading when my thought process behind the trade is looking at both sides of the market because I am very opinionated for the most part. I don't marry biases. I just do whatever the market is calling for, and that is just that. So the 5 minute, the 1 minute, just dropping down time frames until it gets cleaner and cleaner. Possibly been something that you would also as well been looking at on the 30-second chart. So I don't know exactly if people like trading the 30-second chart. To me, I don't really care what the time frame is because it's going to be the same shit over and over. You're just getting down lower into the fractalness of the price. So what was this high up here? I don't know what that was. I'm gonna go ahead and remove that. Just need the opening. Going back to the 30-second chart, and let's go to Friday. Boom. So we go to Friday. We see that we are below opening. The market trades higher. Manipulate some stops up here. Just keeping the same process every single time. So we come up here, 9:30 manipulation, trade above a high, liquidity sweep. The market bottoms, takes some support. Rating stops down here, and we create that bottom within that golden zone of the fib. From here, we're expecting that this candle high, which pretty much started the price swing down, when that gets broken, we now anticipate a shift in market structure, which happens here. So same thing again, it creates that low, higher low, shift in market structure after trading into something of importance. You feel me? These protractions do happen on all time frames, but there's certain key things that you have to see line up in order for you to consider shifts in market structure to be, technically true. So it breaking this last up close or down close candle high would have gave you a confirmation that you would be expecting to see a higher low be formed somewhere within this range. So it does it right there. It respects it. You'll be looking to go long if you didn't already get in at the bottom. 14-point stop. Anything between 15 to 20 points is cool with me. And then you would have been targeting this high. But, we are not basing our projections, of course, off of the 30-second chart, just using the 30-second chart for entry. Ideally, we want to see the high of the day, 4-hour highs, 1-hour highs, things of that sort, to be targeted, and for the daily range to continuously keep spooling higher. So, one of the targets would have been here, this high, 46. These lower highs back here, 62. Of course, the high of the day that ended up being formed in Asia, that was also in confluence with the high of the week as well, because keep in mind Monday was the high of the week, but we ended up breaking that and creating the new high of the week on Friday, and it drawed itself to that liquidity that was resting above the new high of the week on Friday. So PD arrays were smacked up here. Friday's high was taken, the high of the week was taken as well, and this trade went for about 130 points for the range above the high of the week. It went up for about 27 points above this high. So rated stops about 27 points above this high. And that was pretty much the trade recap for the week. Everything that I was identifying, the importance of all the key levels that I have on my chart. I just want to see exactly how many points this was. Was I correct on that? I'm going to draw it from here. Okay, so it was about 33 points. Sorry. So it's about 34.25. So rated stops above there. And really the only last thing we can really look for now is understand that we are in all-time highs. So price is very much bullish. So I wouldn't be surprised if it magnetized itself to, the high of the week technically up here, or the high of the day from Friday's range. We could definitely see that being pretty much played into. And from there, there's really no telling like what we could do because it is bullish. Things that I like to see at these highs, especially these key level highs, is the market come up, rally. We see some raids of stops up here, and then maybe get a trade coming down lower and coming into this little support, and maybe rallying under all these little old levels on Friday. So Monday, maybe we get a sell off before going back higher. Retracing on Monday or Tuesday possibly might be the day that we keep going higher. It's really no telling, especially when you have to factor in things like news. Those do become, drivers for how the market moves once that data comes out. So definitely just, trade what the market gives you, because it can do several things. It can trade at open in Asia, come underneath this low, and then trade higher, rate stops, and then sell off and take out that rest on liquidity below this low. So it's just to give you like multiple ideas, or maybe a thought process behind what you can expect price to do. So honestly, I'll just be looking at price in between this range here, and just get a feeling of what possibly is the next thing that it's gonna do. So I don't trade Asia session or anything of that sort, but I will be looking at this price here and just getting a feeling of what it could possibly might be setting up to tell for the story of Monday. So yes, that was pretty much everything. The very last thing for me to do is pretty much turn on my chart executions, just so you guys can get a feeling of what I was looking at, where I was getting in, and why I was participating in these moves. So I never lie about anything. I show everything. It's good to be able to, broadcast the skill set while I'm being profitable and just showing, people what it is that I'm doing. Because I'm not one of those guys that, hides the P&L, don't show the profits, not no withdrawals. I show everything. I document everything. I do not hide anything or from anyone. So I hope you guys enjoyed the video, and that is all.